Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Wednesday, November 24th, the day before Thanksgiving. I want to wish you all a very happy Thanksgiving, and I hope you have a good time recharging your batteries, catching up with family, having a good meal, all that kind of stuff. It's a great time of the year that we're entering into, not only for markets, but just in general. I always like the fall season, and Thanksgiving is one of my favorites. And then we're going to roll right into the Christmas season, see if we can get a Santa rally and see how that goes. So, as always, guys, don't forget to run your player at 1.25 or even 1.5x to run through the material quickly. Okay, taking a quick look at futures. Equities are a little soft this morning, down about 0.3 to 0.5%. Copper's up 0.75%. Oil's flat. Gold's flat. Bitcoin's down 2.4%. I will tell you that this is historically a positive day 70% of the time. So, I mean, that doesn't mean we can't have a big red day today, but it is historically positive. So maybe this'll turn around here in the pre-market. We're still quite a ways away. I don't know if I mentioned it, but 6:42 as I'm starting the video. We've got a really big macro day today. All the normal Thursday, Friday data points have been pulled into Wednesday. So I encourage you to go to the blog, and I've got a full list, but I'm going to hit the high points here. We've got GDP, jobless claims, personal consumption, durable goods, consumer sentiment, and we've got FOMC minutes at 2 p.m. Those are all potentially market movers. We'll have to see how things come in. The FOMC minutes are usually a sleeper, but we're in the process right now of or in the midst of an FOMC policy shift, going from accommodation, buying bonds, to a taper regime, and there may be hints in there about when do we want to accelerate that process. What would be the conditions for them to double up their purchases? So I think there's going to be a lot of eyes on not only the minutes, but then in the December meeting about the triggers for accelerating that process. And of course, if the next CPI comes in red hot, you may see a lot of pressure on the Fed to hurry up and get out of the bond buying game by accelerating that taper to get out of it more in the March timeframe rather than the June timeframe, which is the setup right now. Now, I want to take a minute to talk about this SPR, Strategic Petroleum Reserve release yesterday. I mean, it was largely a whiff. And the reason for that is, I think, several fold. One, the market is already down 10% off the highs. We've had a pretty quick 2-week pullback, and maybe some of that was just overhang from the speculation about the release, but also we've had elevated COVID fears in Europe over the last 2 weeks. I mean, we talked about Austria shutting down or locking down. We know Germany's got a big problem. It'll remain to be seen if they shut down. But there's been some demand overhang issues on the market, and then plus, what is this SPR thing going to be? So prices were already down. But here's the thing also. within the oil market, you know that there's different grades of oil, light, sweet, and sour, and all this kind of stuff. Well, it turns out that U.S. refiners don't really prefer to refine or crack U.S. oil. It's more expensive to refine than imported oil of a different grade. So if the whole idea was to, oh man, gas prices are we want to influence gas prices, refiners aren't even going to buy that oil because it's more expensive to refine. So, I mean, when the release was made, there was a big, relief rally, not only in crude price, but all your gasoline and your refined product categories were up. So I don't think you're going to see any reduction in gas prices. I think the door is open now for crude to get back on track. I am still fundamentally a bull. 10% pullback is more than I expected, but now that it's happened, it can gather gather itself and get ready for a leg higher. Now we've got on December 2nd, if you're into trading oil, December 2nd, there's an OPEC meeting scheduled. And I think the general expectation is for OPEC to hold the line and not do any jacking around with production. So we'll have to wait and see on that. Okay, on to earnings. We've got Deere this morning, which is the biggest one I see on the board. We've also got that FUTU, F-U-T-U, stock that's really been hammered lately, but it has been a kind of a crowd favorite, and you see it quite a bit in social media, people talking about that. So that's really the only other one I saw. Now, what I want you to do is review the names from yesterday. I mean, we had a lot of dramatic reactions, and I've got the list on the blog site. I mean, we had Gap last night, Nordstrom, there were a bunch of names. Abercrombie and Fitch, American Eagle Outfitters. What else was last night? Autodesk. Big bearish reactions. We did have some positive ones. We had Dell and Dick's and a couple other ones. But there's going to be some good names in there, not only for gap trades, but also bracket trades. And those have been one of my favorites. And it's always disappointing when you go through a chart list where you didn't bother to set the alarm and where those bracket trades would have worked perfectly. So I really encourage you to set a lot of alarms on these stocks because gaps fill, and when you have a big reaction either way, you can always get that gap and go effect where if you get a big gap down where it just keeps going, and then also the gap and go to the high side where you get a good positive earnings reaction, and that sets the stock up for a run. So either way you look at it, they're good ones to keep track of. And one last thought on the holiday. Don't forget to check all your positions. Friday is a half day. I'm going to make myself probably pretty scarce on Friday. I'd like to kind of make it a 4-day block where I can, I'm going to look at stuff, but I'm not going to be tethered to the screen on Friday. And I encourage you to do the same. You do what you like, but it's a good time to recharge batteries, get ready for the end of the year push. And also today, between 2 and 4, don't forget that you can get a really good idea of risk sentiment those last 2 hours of trading heading into a long weekend. It's kind of like the Friday afternoon trade on steroids. If there's a lot of people that are scared, they're going to be getting out of their positions. If they feel emboldened and we have a strong close, or at least an even close, that'll bode well. So keep an eye on that this afternoon. So let's jump into the charts real quick. SPY 2 hour. Here was our fake breakout. We came right down and found support there at 466. And one thing I'll tell you, I was really, really pleased yesterday, and I hope you took notice that, and we'll see it here in the charts, but a lot of these levels were nailed, and if you were following them and trusting them, gave you a lot of nice opportunities for some either position trades or active sequence trades during the day. So let's take a look at it. Right here on this down move yesterday, we essentially had 466 hold the line for 8 hours, 4 candles right there. Bears couldn't crack it. So now that becomes a little pivot point for us today and going forward, that unless the Bears can crack 466, they got nothing. So you can stay, if you got long yesterday, down here at 466 support, then you can stay, confident in that position as long as it holds. And then today, if we break above 468, you'll be definitely positive at that point, and then you can roll your strikes up to just under 468 and look for a push higher if we can get that. And then you can see on the 30-minute chart, got some more granularity here, where when you see this kind of a setup where price finds a level, but then the subsequent bars cannot break below, that is usually your cue to get long, because bears have not proven they can break a level. So you had a great level there to shoot against. Qs, again, fake breakout, divergent high, quick rug pull, came right down to this level that we had here, right at about, let me see what that exact level is. Yeah, 394. We had that well marked. You had basically 6 hours. You had a touch, another touch, and 3 candles right in a row where, again, the bears could not crack it. So today, if you got long, you should be green or kind of on your way to being green. So today, if we can break above 397.50, that would be a good place to ratchet up your stops to protect that win. Now let's look at the more granular chart here on the 30-minute, and you can see that we had this level in here that we arrived at by not only looking at the volume over price bar, but looking where the reactions were along the way. And I mean, if you were focused on it, whether you took the trade or not, this is a point to recognize that there was a strong likelihood that the bottom was in, at least on this leg. Why? Because you had all these 30-minute candle touches, right at 394 that could not be broken. Bears lost power. Now, the bulls did not really take charge till the last hour of trading, but if you had taken a long position anywhere in here and just held your ground from the standpoint, you wouldn't have been stopped out if you had your stop below. So then, you finally got the move higher. And so whenever you see a situation where, after a decline, the bears lose power and a level emerges as support, then it's time to take a shot on the long side, or at least just recognize that the selling is probably over, at least temporarily. Now we'll have to see, does this turn into a just a temporary bottom where we go up a little bit today and then they flush it into the weekend? Well, we've got a nice level right here at 396 to key off of. As long as we hold 396, the bulls would still be in control for this bounce. If they lost it, I think we'd come back to 394 quickly. And, going into the weekend, if we lost 394, then I think that would be pretty bearish heading into the weekend if we couldn't hold this level and we got to move down into the 390 range. Because really, that's the next big level down here towards 390, and that's, $3 or $4 lower than we are now. IWM, look where it stopped. We talked about this yesterday. We kind of anticipated that this 233 area wouldn't hold, but we also anticipated that the 50 EMA on the daily would hold. And look, we got that flush move and a tag of the gap below. Remember what we always say, usually the first run at a gap holds. That little axiom held yesterday as well. So we came down here, tagged the gap, came up, made another run at it, kind of lost energy there. But at the bottom, at the end of the day, the 50-day right here at 3025, 3050 area held. And so now really job one for IWM is to recapture this 233 area and then get on an up cycle. So if IWM can get going, I think that will bode really well for the broader market. Why? Small caps are usually viewed as a risk-on, risk-off type sentiment indicator. And so if the small caps can get going, then I think that'll be a good sign for the broad market. But if this rolls over, remember, this is the boundary of the large daily trading range that has gone back for a year. I mean, if this cannot get above 233, then I think that would be rather bearish for the market. What we want to see is another run like this to kind of take us up into the 240s, 250s, and that would be really, really good for a year-end push. And here's just the granularity on that run into the gap. You can see that a lot of time was just spent in this area testing the gap, and that held. So if you took your active trader Q right here at 229, top of the gap, that was a very objective place to take a long position. And then late in the day, you got to push. And so, if you got in near 229, you got to run all the way up to nearly 232. And that's a good trade at the end of the day. Facebook, kind of weak. We had this trading range emerge. We undercut it yesterday, but then kind of recovered it at the end of the day. I think this 337 is a pretty clear pivot. I think you can be long above it, but this looks a lot like a bear flag. I didn't draw it in there, but you've had a sharp move down, a little bear flag type action. I wouldn't be surprised, depending on how rates go today and kind of risk sentiment. I would not be surprised if this was an A, B, C move, test the top of this gap at a minimum, and then kind of see what happens there. We do have a line of support in here at 328, but at that point, if we're down there, I think it'll just go ahead and fill that gap. So got to watch 337 really carefully. And if you're really active and you see that break, that would be a really sharp Wednesday afternoon trade going from 337 down to 330. And I think that would be pretty quick. Apple found some stability here at 160 and a half, let's call it. Use that as your pivot today. As long as it stays north of 160 and a half, I think you're fine. If it's a risk on kind of day, I would expect a push back up towards 163. If you lose 160 and a half or 160, or definitely this prior low, then you got some room to fall to the downside to come back to 157, and it's not marked here. I should have it marked. 157 was the breakout level. So if we ended up getting a breakout and a back test, that's fine, but then 157 has to hold for a breakout, back test, and go type setup. Tesla. We had talked about this yesterday. We talked about 11.15 being really, really important. And if it didn't hold that, it was going to come down here to 11.80. That's exactly what we got. Turns out that our friend Elon sold another billion in stock yesterday. So, down 4%. I think we must have started right up here. So we had that as a pivot yesterday. So, that was an awesome trade. If you got short Tesla yesterday on the break of 11.50, you got a pretty fast ride down, 80 bucks, or $70, 11.50 to 10.80. But it stopped right where it was supposed to stop, bounced where it was supposed to bounce. So today, I think 11.15 is your pivot. If you can break above yesterday's close, then you've got an open door back up to 11.50. But if it kind of stalls here, and especially if it comes down and breaks 10.80, then you're coming down here to 10.50 or even 10.20 in relatively short order. And the thing is, as long as Elon's selling, that's a lot of supply to absorb. When you're dumping $1 billion a day, I have no idea what his plans are, of course, but he's up to $10 billion now. So the tax bill should be covered. So we're going to have to wait and see. But I continue to think that Tesla is going to be a canary in the coal mine. It lies right in the intersection between fat man, mega cap tech, high speculation, high cult following. If this one cracks, I think it's going to be an important tell for the market. And on the other hand, if it can hold it together, I think that'll be very bullish for the market. So even if you're not trading it, I would keep an eye on Tesla. Microsoft, another great study in technical analysis. Yesterday, we were talking about holding this level, came down really fast, and it stopped right on a dime on our 334. And just like we were just talking about, when you see a stock, sit for 5 hours on a level where the the bears can't crack it, that's where you should be getting long if you're actively trading it and you got almost a $4 push into the close. And, that can be a lot of money on a short-term trade. But you definitely had the setup here with, price not being able to crack 334. Now today, what you got to watch out for is this little move here, a bear flag. Fast move down, lot of points. 350 to 334, $16 in a heartbeat. And now we've got a little kickback rally. What you want to see today, if you're a bull, is a move above 338 that can take you into the low 340s. But if you get a smackdown today against 338, I think you can be short against that and just simply look for a move back down to 334 for starters. And if that cracks, then 331. And I think all that is going to be geared around sentiment heading into the holiday. I mean, we already talked about today is supposed to be a green day, 70% chance. But, big tech has wobbled for the last several sessions. And, depending on what rates do today, if people get a little skittish heading into a 4-day holiday, they might say, you know what? I'll pick it up Monday. Just let's get out of this stuff. It's, I'm not sure where it's going. Just close it out. And if you see something like that, or if that happens, what you could potentially see is this little Fibonacci kickback bear move rally turn into an A, B, C move. And that's what we got to guard against. So anyways, be ready for that event. Same kind of idea here on Amazon. We had the touch of the all-time high right here. Fast move down. And we had this line in the sand nailed. We had the reactions here. And then price found that point right here at more or less 35.30 and spent a number of hours where the bears could not crack it, and then we got a little bounce. I think a key level today is going to be 3,600. If you see a breakout above 3,600, I think you can take it long. But if you see a push into 3,600 that stalls, especially, if you're looking at, a 5, 10, 15-minute chart where it spends a lot of time and cannot punch through, then your objective trade is to get short with a stop just above, and then again look for the A, B, C move. And where you can get extra clues about that is, I imagine if you're trading the FATMAAN names with regularity, what is Facebook doing? What's Apple doing? What's Microsoft doing? What's Tesla doing? What's Netflix doing? And if you see the same kind of pattern emerge where, oh my God, Microsoft got rejected at resistance and, Apple's not going anywhere, and Facebook's stuck in the mud, and Tesla looks like Elon's doing more selling. You know, the odds become more stacked in your favor that Amazon too will have trouble. So that would give you a little bit more confidence in taking a short position, because you're saying, oh, is Amazon going to be the one name out of the whole group that's going to rocket higher into Thanksgiving 4-day weekend with all the other big cap names stalled or going down? Probably not. I mean, you have a stop there in case you're wrong, but you're looking for clues on which side of this line do you want to be on. And then of course the flip side also is possible. If Amazon is stalled right here at 3,600, but you see Microsoft starting to break out, or Apple doing better, you may say to yourself, you know what, I was hoping for an Amazon breakout, but I can grab one of these other fat man names where price is proving it, and take a long position in one of those if Apple is racing, or one of the other names, whatever. So I think when you have your montage up, of your 6 fat man names all on one screen, where you can kind of see what's going on, and you've got your alarm set, you can kind of judge, and that's all, your experience as a trader will come into play. What alarms are going off? What side? What is the market doing as a whole? Is fat man strong? Is fat man weak? If fat man seems strong, what name or names do I want to be on the long side? And if Amazon maybe was one of your top ideas going into the day, have that flexibility where you can say, you know what, it looks stuck, and it looks like Apple and Microsoft, for example, look a lot stronger. So be flexible to switch your gears. Google, another example of a move down, a flat bear flag. We had this 29.25 area marked, and then you got the breakdown, and then you had the top of the gap hold, and then you got the bounce off the gap. So I think today, again, this 29.25 is your pivot point. If you can get price to break above, I think that's a really good sign. But until it does, then price is susceptible to coming back to double check this prior low. Netflix has been weak like the other ones. We had the levels nailed, though. I mean, that's what you should have been picking up yesterday. I mean, all these levels that we had identified, and that's why you're paying me the big bucks, right? To identify these levels, to give you confidence and give you places to look for either stability or a breakdown. You can see here, I mean, we had all these levels nailed. We had a level nail here, stop. Then you get a breakdown, a place to be short, comes down, stops, cover. Doesn't mean you got to get long, but it means, it's not going down anymore. You got a little kickback rally, stopped right at resistance, was rejected, and then you got the big, you had this thing let go at 660, and you got, $12, $13 in like an hour. That's a 1 hour bar. And then it came right back down to the level we had identified right here, and it stopped on a dime. The next bar made no impact at all. Gave you a clue that at least for that leg, the bottom was probably in. And now you got a bear flag. So we're kind of in the middle here. I would be careful with this one. I mean, you're always welcome to draw yourself a line across at yesterday's closing value and be long above or short below, but there's a much higher chance of a whipsaw, taking a position right out of the gate. I much prefer taking positions at more well-defined levels. And then let's wrap up with semis. We said yesterday we had this $5 gap that if that level broke, it would most likely be filled because, I mean, we had it there. The first bar stopped on a dime at the gap entry, and then the following bar let go. So again, we've got a sharp down move. We had a little ultra baby bear flag here. We moved down. Now we got a bear flag into the close. I think here, we had that level. This is the breakout level. So we had a breakout at 305. See, here was rejection. Here was rejection. Here was the breakout. So we are back up to that level at 305. I think it's a clear pivot. If we have a green day, you can be long against 305. And then this would be a breakout, a back test with an undercut to fill the gap. And then if we come back here again, we will have broken out, back tested, and re-broke out again. So that would be a bullish move. So let's wrap it up there. Again, guys, I hope you have a fantastic Thanksgiving. And if you're involved with family activities today, don't even worry about all this stuff. Family first. Be a guy that lends a hand around the house. Or if your family needs you to help prep all the fixins for tomorrow, I encourage you to make yourself available. There's always another day of trading. There's always another day to make a trade. And if you got stuff to do today or you're traveling, certainly safe travels. I wish you all the best, and I hope you guys have a really nice Thanksgiving. So this has been Chris Buss with Trader's Profit Compass. Talk to you next time.